Hi there, my name is Bud, and I'm an implementation manager here at Fusebill. Today, with the help of my colleague Christine, we're going to walk you through some ways to gain business insights from Fusebill's four main reporting pillars, including sales, cash, revenue, and MRR. We're going to discuss exactly what each of these financial pillars represents and how your business can use them. We'll also go through the various reporting options within each pillar in detail. We'll show you how to select the months of data you want displayed, how you can export and schedule reports for data and insight when you need it, and how you can analyze the data and apply it to your business objectives and strategic decisions. All right, Christine, why don't you go ahead and sign into Fusebill and we'll get started.
Great, thanks, Bud. So once you've signed in to your Fusebill account, you can navigate to the left side dashboard and select Reports. As Bud said, today we're going to focus on the financial aspects of reporting. We can break down Fusebill's financial reporting into four main pillars. The first being sales, which is driven off your posted invoices, and the second being cash, which is driven off of all collections coming through the system, whether it be through credit card, ACH, or an offline collection method, like check, cash, or bank wire that's been reconciled. It's all cash that's been recorded through the system. The third is revenue. As you probably know, Fusebill has a deferred and an earned revenue ledger. Funds are moved from one to the next over time on an accrual-based accounting method. So the revenue pillar is based on earned revenue. In other words, revenue that's an asset versus a liability. Finally, our MRR pillar groups everything in terms of monthly recurring revenue. It gives you more high-level executive numbers. Each financial reporting pillar has a summary to review data in that pillar, as well as 6 additional reporting options that enable you to view the data in a more granular way. All our reports are available for export, and the summary reports are available to be scheduled to export. This means you can run them weekly or monthly and have them emailed directly to a specific contact. All right, let's start by diving into the sales pillar. So, within the sales summary, you can choose which time period you'd like to run your report for. For example, you might want to analyze your last 12 months of sales. You can select which currency you'd like to view this report in, which will separate your financials based on the currency you're billing in. You can also include reversals if you want those in your sales report, but we're going to exclude them today. If you generate this report, the first thing Fusebill does is give you an overview of the data. You see your gross sales, the average dollar amount of that sale, discounts given, and net sales at the top. You can break down this report by day, month, quarter, or yearly period. Today, let's view it by month.
Being able to see your company's sales in these various time increments is a powerful initial step in identifying trends and forecasting results. When you're dealing with combinations of monthly and annual customers, it's especially useful to be able to compare those different time increments to their historical equivalents. This can help reveal a more consistent pattern of sales activity. For example, here you can see sales data broken down by monthly increments. And it's hard to see any clear trends. But if that same sales data is broken down by quarterly increments, we begin to see a pattern of growth through Q4 and Q1 emerging.
Definitely. So, with our sales summary, you can also separate your net sales versus your gross sales. If you want to run this report without taking discounts into account, you could do that as well. If you apply these options first, you're going to get a graphical view, which you see here. This gives a good visual idea of how your business has performed over the last few months in terms of sales. You can click to remove and add the different metrics. For example, this view is showing our cumulative sales, our direct monthly sales, as well as our daily average. We can click on any of these metrics to include them or exclude them from the report. If you just want to get an idea of how you performed each month, you'd look at your direct sales. And if you highlight any particular month, you can get a good view of the number of sales that happened and the dollar value of those sales. For example, here we can see in May 2019, our sales were $252,301.25, and we made 256 sales. This shows you how each month performed, so you can get an idea of your seasonality with your sales, such as when they tend to pick up and drop off. If you just want a cumulative view, you can remove the two other metrics, and that will show you how you've stacked on revenue over time, giving you a good idea of growth over the year. And if you just want to have a look at your daily average, you can select that metric. Again, it's giving you more of a seasonal view, but it's showing actual sales as the months have gone by, which shows how you're trending.
Being aware of your business's sales progression can be extremely useful. For example, if we look again at that graph showing sales data by quarterly intervals, we can clearly see a pattern of strong Q1 performance over time and significant Q4 growth. Quick access to this kind of visual data can provide justification for important sales and marketing decisions. Your team can establish future sales or budgeting targets that are realistic, or focus future activities on increasing average sales or volume of sales. Back to you, Christine.
Thanks, Bud. If you scroll below, you can also view all this information in a table format. It will break down all the months you've run the report by, and it will give you those high-level numbers, including gross sales, discounts, net sales, and cumulative. So you can get a look at the total amount of sales over the whole period that you've run it from with the cumulative report, and then the average dollar value of your sales per month as well. As I mentioned, all the summary reports are available for export, and you can also schedule these exports to run and send automatically to any email of your choice.
This is useful functionality for keeping key people in your business informed without them having to log into Fusebill to get the data each time. For example, the CEO of your company might want to see a certain summary report once a week. Christine, let's walk everyone through how to schedule a report to send.
Sure. So, to schedule a report, you click it to run your report, give it a reference name. This will appear in the email subject line. Click the option to schedule it. Enter the recipient email address, and choose whether to send it daily, weekly, monthly, or quarterly, if you prefer. You can also choose which day of the week to send it. The system will let you know if you have any similar schedules for this report, which you don't in this case. Finally, you can decide whether to send the data for the last or current month or year, and it will tell you exactly when the first report is scheduled to send.
So you can really decide how you want to break down your summary reports and have them scheduled for automatic delivery. Christine, I think it's time to get into the more granular reporting for the sales pillar.
Okay, sure. So Fusebill has 5 generic metrics used to break down your report for 3 of the pillars. These metrics include the customer, the plan, the product, the general ledger code, and the activation cohorts. These metrics are the same for your sales pillar, your revenue pillar, and your MMR pillar as well. So we'll go through them in detail for the sales pillar, which will make it obvious how they behave in those other 2 pillars. The cash pillar has some slightly different metrics that are more pertinent to cash. The 6th metric the reports are broken down by is sales tracking code. Basically, this is used by customers to create their own metric.
As a side note on that, you can have up to 5 sales tracking codes attached to any customer account. The most common use cases for this would be to track resellers or salespeople. For example, you can run cash by sales tracking code and break it down by your salespeople tracking code. This will give you an idea of how much cash has come in this month through sales made by different salespeople, and you can use that data to calculate commissions. For example, the green boxes in this graph represent the percentage of cash each sales rep has generated for a defined period. So the top sales rep here is bringing in nearly 50% of your business's cash over this period. But back to the sales pillar. Let's have a look at our sales by customer and generate a sample report.
Sounds good. So this is probably a report you'd want to run for the last quarter. You'd likely want to have a look at your gross sales, and you'd want to include any reversals that might have happened. Similar to the sales summary, you're going to get a high-level overview at the top showing gross sales, discounts, reversals, and net sales. But since this report has been run by customer, it's broken down by the metrics you hold on accounts. That might be the company name, an ID number you have internally, or the name of the customer. You can also break it down by the top 10, 25, 50, or 100 customers. The result is a rich report showing who your biggest customers are, who's bringing in the highest percentage of sales, and the dollar value of those accounts. For example, you can know by just looking at this heat map that the top 6 customers here are bringing in around 50% of the business. And Elfie Sampler alone is bringing in nearly a quarter of the business, with $450,000 in total sales. If a high percentage of sales are coming from just a small group of customers, it's a good idea to mitigate risk by diversifying your clients, in case your top customers go out of business or decide to take their business over to your competitor.
Let's quickly look at a different account example. But this time, let's compare heat maps when we look at the data by gross sales and then by net sales.
In this first map, like with the account we looked at that contained the Elfie Sampler example, you can see that Super Mega Core is contributing about half of this company's gross sales. We can also see that this company is really heavily dependent upon its top 10 customers, as the rest of their client base contributes less than 20% of the gross sales volume. If we re-examine the data from a net sales perspective and take discounting into account, we get a very different map. Super Mega Core is heavily discounted, and although it's contributing about 10% of net sales volume, it's not really the biggest customer. Bob's Trucking is. Now, you know exactly who your top contributing clients are, and maybe where to really focus your customer success efforts. Great, okay, so back to our original example account here. You can also have an idea of who your mid-size customers are, and then, obviously, all the rest of your customers, who are bringing in more micro amounts of sales. You can view each account in more detail too, if you like. If you click on a particular customer, Paul's Mobility Shop in this case, you can see the dollar value it's bringing in month over month. So on this account, I can see a steady stream of revenue coming in from this particular customer. You can also view all of this in a table format. It breaks it down by customer Fusebill ID, company name, and the sales seen by that customer over the last few months. Here, we see Elfie Sampler, which we can assume by this data is a quarterly or annual biller because there's $0 amounts in these months, but it's my biggest customer. If you need more information on a customer, you have your Fusebill ID available to take you directly to the dashboard and view the account. From there, you can get more details on the lifetime value, the recurring charges, whether they're in a good standing, etc. Now, let's look at sales by plan. Again, it's the same as the sales summary report, but we're breaking it down by that further metric. Let's have a look at the previous last month. Maybe you rolled out a new item in your catalog, and you want to understand how it's performing. By generating this report, you can review the high-level numbers at the top, and you can display your sales by plan for your offerings. This view shows what you've sold by actual offering in the last month. It even breaks down plans by frequency. So, for example, your Gold monthly plan is a top seller, bringing in over $70,000, or about 20% of your total sales for this period. But the annual version of your Gold plan, which we couldn't even see in the heat map above, isn't selling quite as well. It's only bringing in around $2,500 in sales for the same period.
So this report really gives you an idea of how your marketing efforts are going and what the market is responding to. It shows you which of your offerings are most attractive and lucrative, so those are probably the offerings you want to push in terms of advertising or even discounting. As another use case example, let's go back to what you said about breaking plans down by frequency. Since your Gold monthly plan is a top seller, you may want to consider putting a premium on your monthly plan. So when customers pay monthly for it, it might be 10% more expensive per month than the annual version. That's a really strategic pricing decision you can make based on this report.
Definitely. And if you go ahead and break down the same report by product, it gives you the exact same high-level numbers, but you're going deeper and seeing your sales by products now. So from this metric, you can see your individual streams of revenue.
Nice. So because this report shows you which individual products are bringing you the most revenue, you can really decide which of these products you need to include by default into your plans and which can be optional add-ons. For example, Christine, your heat map here shows our subscription fee makes up over 40% of our net sales. This is the product that's really bringing in our customers and making us most of our money. And another thing, By understanding not just which plans customers prefer, but also which products within those plans really drive your revenue, you can also help direct your messaging and marketing efforts in terms of your company's value proposition. Back to you, Christine. Let's move on to sales by GL code.
Great. So if I run a report for the same period, again, I see the same financial numbers I saw with my sales by product report at the top. But in this report, I'm breaking it down a little differently. I'm grouping my various products into what's called general ledger codes. A general ledger code is something you use in an accounting system to separate your streams of revenue. So it's not as granular as by product, but it's a little more granular than a sales by plan report. There are multiple products within each general ledger groupings. For example, here we see our recurring offerings are bringing in just under 50% of our net sales. This category could include a variety of different recurring products, from subscription fees to tech support to monitoring services. For hardware, you might have GPS devices, cell phones, or whatever it may be, and the same for usage, or whatever GL codes you've set up for your company's product types. Like with the other exports, this is available in table format for export, so you can dissect this information in Excel. Keep in mind, though, when you export reports like this, you're going to pull the raw data out of the system. For example, here's what this sales by GL code report looks like when we export it.
If you're looking to pull more granular sales data like customer fields, tracking codes, reference fields, and such, which are all associated to products, plans, and customers, you can pull this raw data by exporting customer and subscription reports. These can be found under the Entity section of the reporting module. And once the data is in an Excel sheet, you can sort by custom field or tracking code, for example, to get an idea of perhaps which region is bringing in the most amount of cash for your business or which market campaign led the most amount of customers to your registration page. And that's a powerful aspect of the exporting feature. But back to our sales pillars and on to sales by activation cohort. Christine?
Sure. The activation cohort option runs a report based on when your customers signed up. This is a complicated report, so let's just run it for the past quarter first for simplicity. You can run this by sales amount or percentage amount for customers. But basically, what it's breaking down is your historical customers all the way back to when your company started using Fusebill. In this case, August 2014. For example, if you run it by percentage, you'll see what percentage of customers from each cohort remained on the system and continued to pay. If that line remained flat, that means you've seen no contraction and no expansion. If it goes up, you've seen some expansion, which is always nice to see. But if it goes down, you've experienced some churn. For example, the March 2020 cohort has seen a steep decrease in customer value, so I probably saw some severe contraction from this cohort. Let's run the report for 12 months now to give us more data. Again, it's tracking how these customer cohorts are performing. And if you break this down by dollar value instead, you get an idea of the amount of sales being driven by customers in each cohort, and whether that has increased or decreased over time. So I obviously saw a huge amount of churn with this cohort, and similarly with this one here. So we can delve into why this has trickled off so much. So in terms of your historical customer base, which customers are still with your business, which are still paying, and how much up to this particular time period. Again, that's all available for export, and there's a lot of advanced analytics you can get in terms of churn, customer retention, customer life cycle, and lifetime value.
There are huge benefits to tracking your business's activation cohort activity. The obvious first is to identify specific monthly sales volumes from the groups of customers you created in previous historical months. This data can give you insight on the proportion of sales volumes coming from your recent subscriber base compared to your older customers. And when you track this properly, you can establish baselines for the percentage of sales volume anticipated from your customers this quarter and into the future. Another benefit to tracking activation cohort activity is being able to track the quality of customers churning out of your product. Because as we know, sales churn and customer churn are not always the same. For example, if we look at the customers that make up this January cohort, we see the apparent contradiction in churn data. We see that sales are holding up relatively strong despite the lower retention rate. If we dig even deeper and have a look at the data in a chart format, we see why. The customers being retained are of a better quality. So if larger enterprise customers like Megacorp are carefully nurtured, and if customers like Fremont Tech have their sales volume tied to usage, it can lead to significant sales retention despite high levels of customer churn. Let's look at one more benefit since we're on a roll here. Tracking your activation cohort activity can also help you monitor and track your sales churn rate. Here, for example, we see a steep drop in month 2 for this cohort. It's wise to identify which month within your customer lifecycle you're typically experiencing the most sales churn. Then, you'll know the best time to implement churn mitigation efforts for your customers to hopefully reduce that churn over time. Because even modest improvements in your sales retention rates can lead to increases of 10 to 15% in annualized sales. Okay, back to you, Christine.
So, the final reporting option for this pillar, which we already touched on briefly, is sales by sales tracking code. This provides us with multiple metrics to add to this particular reporting pillar, and it opens up a whole new world of reporting. Sales tracking codes are assigned at the customer level, and a code might be for a sales representative associated with that account, the region that customer lives in, or the sign-up method. The method could be from inside sales or from a registration page. Or maybe the code reflects the sales manager or the reseller that brought the client to you, the affiliate partner, or some other sales channel you've used to bring customers. For example, this report breaks down sales by reseller. So you get a good idea of reseller A versus reseller B versus all the rest of the affiliate partners. Not specified here would be internal sales, so there's no tracking code attached for resellers. What this report allows you to do is clearly see the amount of sales brought in by those different affiliate partners. For example, here we see that reseller B is the top performer, followed by reseller A, followed by Mega.
As I mentioned earlier as a side note, you might typically run this report by cash by sales tracking code to get an amount of actual cash in the bank brought in by those different affiliate partners, and that's going to enable you to pay commissions quite easily. It will show that you've collected from the sales your affiliate partners have made and how much you need to pay them this month for their services. And it's a similar idea for salespeople. You can calculate commissions this way too. So that's it for the sales pillar. Let's dive into the revenue pillar next.
Perfect. So the same reporting functionality we've just gone through in the sales pillar applies to the revenue pillar metrics as well. However, keep in mind that revenue is showing money that's earned. So while your sales are just running off the invoices you've posted, your revenue calculates how much you've actually earned over time. Also, one metric that's slightly different for this report is the revenue by GL code report, which breaks down more accounting-specific type terms. For example, you see accrued discount, earned reversals, discounted reversals, and net revenue. And because this is by GL code, it's those accounting groupings that you might be leveraging in your accounting system. This report also lets you display information by ledger. So if you activate this display by ledger total, it gives you those more specific accounting metrics at a GL code level.
What a lot of our clients like to do instead of just using a summarized earned revenue number and taking that over to their accounting software is they like to break their earned revenue down by general ledger code. So during their reconciliation at the end of the month, they'll take these numbers over instead so that they can have a deeper understanding of their different revenue streams. They can see exactly how much money has been earned versus how much needs to be taken out of the deferred revenue ledger this month and put into the earned revenue ledger for each particular GL code. So this is important due to the fact that clients only want to recognize the revenue at the appropriate times. Let's say you make a big sale right around year end when you'd file your corporate taxes. You wouldn't want to pay taxes on the complete amount of that new sale when you still owe the customer services for a certain period of time. You only want to pay taxes on the earned part of the revenue. Over to you, Christine.
That's really the only report that's slightly different from the sales report in the revenue pillar. Obviously, besides the fact that we're not seeing total sales, we're seeing earned revenue on all reports. The reports in our cash pillar are slightly different, though. We can run them by customer, we can run them by activation cohort, and we can run them by sales tracking code, just like within the other pillars, and it will show those same metrics. The obvious difference is that we're going to be looking at cash collected. So, of course, there might be some outstanding or overdue invoices, or there might be some overdue net terms on certain invoices. Typically, you've never collected as much cash as what you've invoiced for. Let's look at the more unique cash reports, though, which we quickly touched on earlier, starting with cash by payment method type. This report shows your customer's preferred method of payment. In this example, most of the cash is coming in through credit card, followed by check, then ACH, and then a very small amount through direct deposit. This is the type of metric the cash reports are designed to give you.
You can use the table format of this report to sort of cross-reference with a gateway report. So if you aren't too sure about some numbers you might be seeing in Fusebill, or some numbers you might be seeing if you're using your Stripe ACH gateway, you can always cross-reference these reports and they should match in terms of the period totals collected.
Yes, correct. Let's look at cash by payment method, which is slightly different. It breaks down the payment method types even further. So for credit card, are your customers paying with Visa, MasterCard, or Amex? And for ACH, are they using checking or savings accounts? This report really dives into what sort of accounts you're collecting from and what sort of processes are bringing in your cash. The last report in this pillar is the Cash by Gateway. This is a very useful report, especially when you're trying to understand the value Fusebill is providing your company from a dunning management perspective. For example, you can have a look at your initial success for a particular period. Because we're in a demo account and we're using a test gateway, we don't have any retry success reports. But when you run this report in a live account, you see another row here that says retry success. And what you'd see from the retry success is how much money over a particular period dunning management is saving your business.
What we usually see is up to 4% in credit card retry success. So you'll see that amount of failure, and then you'll see Fusebill recovering those funds through the Dunning Management credit card retry process after the initial failure. This dunning process goes on in the background, so your business can automatically collect those funds without having to get involved. Okay, finally, let's have a look at the monthly recurring revenue or MRR pillar.
All right, so if we go take a look at the MRR summary, this is designed to give us some more executive level numbers. If you want to just get a good idea of the health of your company, you can run this by net or gross MRR, and you'll see how your company has grown and scaled over the last 12 months. Again, because this is a demo account, we've obviously dumped in a lot of data, which we've then churned some of it out here. But what you'd see in a live account is a steady growth of MRR. Unless we went through a recession or a pandemic, then you might see some negative growth. But typically, you'd see a steady growth in MRR. This report gives you a good idea of how your company's performing over a particular period in terms of growth. And if you need more granular information, you can dive down into any month. Let's look at March, here for example. We opened with $264,000. We added $137,000 in new monthly recurring revenue. And we saw some expansion from our current client base, which is always healthy. We saw some contraction from our current client base, and some churn, which is inevitable as well.
A huge success metric of running a SaaS company is just reducing that churn number. So can you show us how we can find more data on customer churn?
Definitely. So if you scroll down to the table display, you'll see it's slightly different than the tables in the other pillars. In this table, you can actually drill down into particular financial numbers. So for churn, if you want to get an idea of your customer activity in this regard, you can see your historical customers here. You can see exactly when each customer signed up and when they churned. In December 2019, for example, I saw 6 customers churn out, and I can see the total value of those accounts. I know they signed up in December 2019 and they churned out in February 2020, so they might have been some trial customers or something like that. If I review contraction, for example, I can see this customer that signed up in October 2018 is still a customer, but they shrunk by about $143. So perhaps they removed a module they weren't using, or maybe they had some usage contraction. It's the same idea with expansion. Again, this reflects our existing customer base, but it's customers that have grown. This is very healthy. You always want to upsell and farm your accounts. So, for the cohort that signed up in April 2018, we can see how those accounts have grown and in which months. And then you can see all your new customer growth over this period as well. So, this customer signed up in February 2019, but they added a completely new subscription to the account. So, it wasn't just an expansion of an existing subscription, they actually bought some new services. Again, all of this is available for export, so you can get a lot more detail when you pull that out the system in terms of custom fields and tracking codes. The rest of these reporting features are the same as in the other pillars.
Awesome. Well, we've covered quite a bit, and I guess that's a wrap. So thank you so much, Christine, for walking us through those 4 financial reporting pillars. And of course, if you're watching this and you have any more questions about running these reports, our customer success team is always available to help you get the data you need. Thanks so much for watching, and see you on the next webinar on demand.